Hello and welcome to this tutorial on accounting equation. In this video, I will show you how to solve accounting equation with concept and examples using easy tricks. This is the chapter of Principle of Accounting and is a curriculum of class 11. If you want to get knowledge in depth about accounting equation, do not miss the video till the end. Without getting delay, let us start with the lesson. Accounting equation. Accounting equation is the basic principle of accounting and fundamental element of the balance sheet. It shows the relationship between the economic resources belonging to the business and the claim against these resources. It signifies that assets of the business are always equal to the total of capital and liability. This concept is better understood as the accounting equation is based on the concept that the stock the business owns equals to the stock business owes. Every business transaction involves double effect of equal value. Such double effect create an equation which is called accounting equation. That is, if a firm gets something that should compulsorily be spending something of equal value. Accounting equation is considered to be the foundation of double entry accounting system. On the company's balance sheet, it shows that a company's total assets are equals to sum of the company's liability and shareholders' equity. Every transaction of the business, regardless of its complexity, has its effect on the accounting equation. The business transaction may bring a change in all or any of the components of the equation. Whatever may be the change, that is, increase or decrease in the accounting equation remains in balance. For instance, while purchasing goods worth rupees 500, the business gets goods worth rupees 500, which is equals to the business spends money worth rupees 500. This relation in accounting is presented as assets equals to liabilities plus capital. Accounting equation is based on the principle that assets of the business should always be equals to the total of outside liabilities and the owner's equity, which is also called capital. Assets are the resources owned by the business firm for the future benefit, while liabilities in the capital are the claim over the assets. Therefore, the accounting equation shows the relationship between the economic resources belonging to the business and the case. The process of determining the effect of each transaction in each component of the accounting equation, that is, on the assets, liabilities, and owner's equity, is the transaction analysis. This process shows the increase or decrease of each component by effect of each financial transaction. With the help of such analysis, we can journalize the transaction in the books of original entry or directly post on the debit or the credit side of relevant asset or liability or owner's equity account. Now let's see what do is all of component contains. Assets may be the cash, the bank, the debtors, the stock, bills receivable, and prepaid expenses. Liabilities may be creditors, loan, advance income, bills payable, and outstanding expenses. Likewise, capital may be the amount invested in the business, the profit, and the loss. The table presented over here will help to understand the effect of changes in assets, liabilities, and the capital due to the various transactions. The commencement of business, it is increasing the assets by cash and owner's equity by capital. Purchase of assets or goods for cash, it is increasing asset side as well as decreasing the asset side cash. It will not have any effect on liabilities and the capital. Purchase for credit, it will increase the assets meanwhile also increasing liabilities. Sales of goods, it is increasing as well as decreasing in the assets. This transaction also will not have any effect on liabilities and capital. Sales for profit, this will have multiple effects. In one hand, it is increasing in assets as well as decreasing in the assets. It is increasing assets by cash, decreasing assets by the goods, and we are also gaining some capital, that is the profit. Capital is also increasing. Loss for the sale. The same transaction occurs as we had done in the sales for the profit. Here, the loss amount should be deducted from the capital. Cash received from the debtors. While receiving cash from the debtors, in one hand, our debtor is getting decreased and the cash is getting increased. It will not have effect on capital and liabilities. Advance income. The advance income increases the assets as we get cash in our hand, and it will also increasing the liabilities because we need to pay back the amount in the future if we could not perform the task that we have assigned. Drawing is the amount that is withdrawn from the business by the proprietor. It in one hand decreasing cash in the asset side and also decreasing the capital in the other side. The accounting equation, the causes of change in the assets, liabilities and capital by the different transactions of the business is per its principle, which are as follows. The cash increases when the business is commenced with cash. Additional amount invested in the business. Goods are the assets sold for cash. Credit amount received from the debtors. Loan or advance received. Cash withdrawn from the bank for business use. Income received, etc. It decreases when cash drawn for personal use. Purchase of goods or assets for cash. Payment to the creditor or payables. Repayment of loan or advance. Cash deposited into bank. Cash payment for the expenses, etc. In the same way, the bank increases when the business is commenced with bank balance. Cash directly deposited into bank. It gets decreased when cash withdrawn from the bank, when check is issued or any payment made by the bank. Debtors. Debtor is the person, firm or organization who take goods or services on credit from the business. The debtor increases goods sold on credit, dishonor of bill accepted by the debtor. We will study later about bills. What is honor, what is dishonor of the bill in accounting of bills of exchange. It will decrease when cash received from the debtors or receivables, sales return or bad debt, discount allowed to the debtors, acceptance of bill by the debtors, etc. Stock or inventory or goods. Goods are the things which are purchased by the business for resale purpose. It is the main concern of the business to which it deals with. It increases when goods purchased for cash or credit, when sales return occurs, and it decreases when the goods sold for the cash or credit, purchase return, goods used for personal use, and lost, theft, distributed as sample or gift. Liabilities. Liabilities are claims of other against the business. Like an asset, a liability may also be changed from a transaction of a business. It increases when goods are the assets purchased on credit, acceptance of bills of payable, loan received, amount due to payment for expenses, income received in advance, and it decreases when amount paid to the creditors, purchase return, etc., amount received from anyone else, payment of bills payable, payment of outstanding expenses, service rendered or income earned, repayment of loan, etc. Capital. Capital refers to the amount invested by the proprietor in a business. It also includes the amount of profit or loss. It may also be changed from a transaction of a business. It gets increases when commencement of business by cash or bank. Additional capital invested. Additional investment is the capital. Interest, commission, dividend, etc. are on. Profit earned, discount received, bad debt recovered, etc. It decreases when cash or goods withdrawn for personal use, expenses incurred, goods are assessed, sold on less than the cost price, or loss incurred, discount allowed, bad debt occurred, loss by fire, theft, or any other reason. The preparation of accounting equation. Usually, the accounting equation is prepared in this way. The first column goes for serial number, the second for transaction, the third for assets, liabilities, and the capital. The first question is written in this way. The serial number, what is the transaction, we write in the transaction column. The effect of prospective transaction is written in the assets, liabilities, and the capital. It is concluded as beginning or the starting transaction. We will continue to write like this till the second last. The sum of the second transaction, new equation. At last, the final or the ending transaction. We will terminate the accounting equation with final or the ending equation. Easy trick for accounting equation. Accounting equation can be better understood with the following terms as owes, and they are ons and owes. As we had seen it earlier, business ons is always a cost to the business owes. Its owes is only one, that is assessed, but assessed may be of different forms such as cash, bank, land, building, machineries, stock, debtors, etc. Its owes are of two types. They are liabilities and capital. Liabilities are claim of outsiders and is like debt in nature, whereas capital is the owner's equity. It may include amount invested in the business, profit earned, and the loss incurred. We will see this with one example. The question is, as started business with bank balance of rupees 2 lakhs. When business is started with cash, it increases cash on the asset side and also increases capital on the other side. Sometimes a business is started not only with cash but also with other assets too. In this situation, asset side is increased by cash as well as other assets, and on the other hand, capital is also increased by the same amount. Here, the transaction is balanced with equal amount of rupees 2 lakh. Next transaction. When goods are purchased for cash, it increases stock or the goods but decreases the cash or the bank balance in the asset side. This transaction does not affect liabilities and the capital. In contrary, if it was purchased on the credit, liability would have been increased as a creditor. Paid salary of rupees 20,000 by check. Any expenses decreases the cash or the bank balance on the asset side and also decreases the amount of capital on the other side. Goods. Sold goods costing rupees 50,000 or 70,000. When goods are sold in cash, it increases the cash amount with the sales amount but decreases the stock of goods at the cost price on the asset side. The amount of profit is added in the capital, but if there is loss, then the amount of loss will be deducted from the capital. Goods lost by fire, accident, theft, etc. When goods are lost by theft, fire, accident, and etc., then the following treatment are made in the following situation. When goods are lost, an insurance company does not admit any claim. It decreases the stock of goods on asset side and also decreases the amount of capital on the other. But when insurance company admits full claim, it decreases the stock of goods but increases the amount of receivable on the asset side. When insurance company admits partial claim, such admits claim amount increases and the receivable on SS side, but the amount of the total loss, including claimed amount, decreases the stock of the good on the SS side. It also decreases the amount of capital by the amount not admitted as the claim by the insurance company. At last, the transaction that we had solved one by one will get the shape of following in solution. The first transaction increases the assets with the bank and the capital with the same amount. The second transaction causes assets side to increase with the goods of rupees 80,000 and the decreases bank balance with the same amount and did not affect liability and the capital. The third causes assets side to decrease bank by rupees 20,000 and the capital by the same amount. Likewise, the fourth, when the goods sold in the cash, it decreases the stock of goods at the cost price but decreases the cash balance with the sales amount on the asset side. The amount of profit is added in the capital, but if there is loss, then the amount of loss will be deducted from the capital. We have just solved the accounting equation with concept with the easy trick. This video is always available in the Google Classroom. Please log on to classroom.google.com and join room with the code RZOCBMS. I will be posting new lesson continually. Thank you for watching.